Paul, thank you for that. Well, with stocks now dropping after yesterday's interest rate raise by the Fed, a lot of people continue speculating on whether we are heading toward a recession. Joining us now, Kirstin Myers, editor-in-chief of the Balance. Kirstin, thanks for being with us. All right, so we saw that stock surge yesterday after the Fed announcement, but today we are back to these major sell-offs. What is the thinking on Wall Street?
Yeah, so yesterday, essentially, the Federal Reserve did what everyone pretty much was expecting, which is hike interest rates by 75 basis points. And initially, investors were happy and excited because it meant that the Federal Reserve, the central bank, was willing to really get aggressive about fighting inflation, because those inflation fears have really been of huge concern, not just to economists and consumers like you and me, but also to investors. But of course, after the dust settled and investors woke up this morning, they really had to contend with what that meant, what that means. And essentially, with the Fed hiking rates more and more, and then, of course, Fed Chair Jay Powell saying that another rate hike was very likely next month in July, that's when people started to consider, wait, hold on, this actually might mean we're going to be heading to a recession now, and that's not good for anyone either.
Okay, so Kirstin, some are suggesting a shallow recession would be best. Can you explain what that is and why that would or would not be a good thing, a shallow recession?
Yeah, so a shallow recession, just as it sounds, is a recession, but without long-term economic pain. So maybe a mini recession, you could think of it, or as a baby recession, perhaps. So when you're thinking about the economy, think about a pot of water that's boiling on a stove. And lately, it's kind of been boiling over. And so what the Federal Reserve has been doing is doing what I think most folks at home would do if they saw a pot of water starting to boil. They would take the lid off and try to make sure some of those bubbles come down, or they would actually go and turn some of the heat off. And that's exactly what the Federal Reserve is doing right now. Now, if they turn that heat off and the water stops boiling altogether, that's not necessarily a great thing, because you do want some of your water to boil when it comes to the economy. That means it's continuing to grow. But by doing that, by having that little recession, that shallow recession, it gives us the opportunity to really bring that inflation down and then start stimulating the economy again so that it can start running, but not run too hot.
All right, so Kirstin, what should people with money invested in the markets, or just with their money, period, what should they be doing right now?
Yeah, so two very different things. In advance of a recession, this is a really great opportunity if you don't have a lot of savings to start to save. Because in a recession, of course, we do see people, unfortunately, can lose their jobs. Unemployment can tick upwards. So this is the opportunity to really build as much emergency savings as you possibly can, especially as wages have gone up recently. So take advantage of those opportunities. Save, pay down some debt. Now, if you are invested in the market, this might depend a little bit on your age. If you are younger, this is an opportunity for folks that are younger investors. You're going to be in the investing game, in the stock market, for a very long time. If there's stocks out there that you like, that you believe in for the long term, you can consider this as some of those stocks going on sale right now. So take advantage. If you're a little bit older, let's say you're closer to your retirement, I know this can be a very scary time. Retirement savings are declining. This is a time for you to mitigate some of your risk. Start looking at things like bonds, for example, and start reducing some of your exposure to some of your stocks. Start diversifying that portfolio to really spread some of that risk around. And that'll definitely help you as you head into that retirement phase.
Yeah, that's certainly advice we can all use. Kirstin Myers, editor-in-chief of The Balance. Thank you. Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.